This is Eric Mwathe with Mwathe.com for November 10th, 2008 after the close. On this video I'm going to show you that the market right now does need to decide what direction it's going to take, and whatever direction it takes is going to be it's going to lead to a strong move either downwards or to a strong rebound in the market. As you all know, market's trading in a range, but I think it's about time now for it to decide what direction it wants to take. And the reason why I say that is I'm going to show you two charts where one of them is bearish to the market, but it's also bumping into price channel top lines. And also I'll show you that the Qs are also doing the same thing. So either we cannot keep in this range. Either one of them is going to go up and the other is going to find support or resistance at those levels and head lower. So actually, to be very honest, I see that the VIX is bumping into price channel resistance. It's right now trading at that level, and so are the Qs. So one of them is going to have to decide what they want to do. Either we break out of that range and the other one goes down, because they can't all go down and go up out of this range at the same time. Also, in this video I want to talk about, whenever you look at the RSI, let's say that's the RSI support line, and you come back and make a double bottom, let's say, this usually leads to a move higher. Okay, this is a strong confirmation that the line you're forming on the relative strength index, the RSI, is legit. I've talked about this many times over the last couple of weeks, and you usually don't break this. All right, you don't break this formation. It's rarely do you find that the markets will head in the opposite direction, for example, in that direction. But, and this is very important, but when they do, this is a very strong move. When you break the double top, it's a very strong move in the opposite direction, because what was confirmed support has now been broken, and that leads to very fast moves in the opposite direction. Now, why is this important? This is important right now because we have both instruments that should go higher with the market. We have both bearish and bullish instruments, both of them resting at double tops and double bottoms. All right, so we have the RSIs for both bearish and bullish instruments. They are both a double bottom confirmation or double top confirmation. So which tells me right now the market is going to either decide it really cranks the heat on bulls and it moves to new lows on the major averages, or we find a very strong rebound in the market, taking the market way beyond the range of the S&P 900, which has been 1000, S&P 1000, which has been resistance on the upside. And that is going to have to be resolved starting tomorrow, actually. And I'll discuss that in this video. So quickly, if I can move to the next chart now, like I said, these are the quad Qs 1 year daily chart. You know what? Let me repeat one thing also. One other thing, that if you can take the 13-day moving average, 13-day simple moving average on most of the market indices like the S&P 500, the Dow, the Nasdaq, you'll find that we are now trading in a range like that. Okay, essentially we are trading in a range. We are either going to move out of that range, which is going to lead to a strong move high in the market, or we are going to break down. We are actually stuck in this consolidation on the 13-day moving average, and I'm also going to show you that. And you can see the gold color here is where the 13-day moving average on the quad Qs is showing up, so we either trend lower or we head out of that range. Notice also we have this price channel top lines that I talked about in the introduction, which is giving this instrument some resistance to the upside. Okay, so we have that going for this instrument. Also, notice it's not very noticeable, but the RSI right now is forming two double bottoms on this instrument, right there and there. So it's actually doing something like that. So it's usually this resolves to the upside, but because the market's been very weak, if you see it trend lower, that's gonna be your cue to go short this market one more time. Okay, now let's look at the SPY, and again you see the brown color. This is a 13-day simple moving average. It's trading in this range right here. It's either gonna break out to the upside or break down, and when it breaks down, it's gonna be straight to new lows in the market. It's not gonna be very pretty if you're long the market. If you're short, you have to take the opportunities the market gives you. So if we break to the downside, anybody can follow this 13-day moving average. Well, right now we are consolidating. If we break out of that range in either direction, you can move your, where you're positioning your market. Your position either to the downside or to the upside. Short the market or go long. This is the Nikkei, I think a 1-year daily chart. Again, you see yesterday on Monday they had a 5%, almost 6% move that again ran into price channel resistance. That's very obvious there. And notice also the 13-day moving average is also forming a consolidating pattern. Now I don't know what it's gonna trade, where it's gonna close, but more than likely this price channel resistance is gonna come into play for the Nikkei. We can watch that overnight to see how that does influence the charts in this side of the world. Now, one of the reasons why I'm kind of leaning towards a market breakdown is because as of yesterday's close on the Nikkei, we have this double bottom that was confirmed last week. And now we are back to RSI channel top lines resistance. More than likely, given that we traded lower today in our markets and they're probably gonna be trading or under pressure today, more than likely this heads lower. And because it's gonna be moving into the oversold area again, it's gonna be bearish for our markets here in the US and probably even in Europe and actually worldwide. Also, well, I guess that's pretty much it on this chart. So here, double bottom tops confirmed again. We are also hitting price channel top lines. More than likely we might resolve to the downside. As a trader, you never really should predict which direction the market will take. Again, as a trader, you can never really predict which direction the market takes. You just have to play what's there. And so for now, we are consolidating. I don't know which way we go. It's just speculation on my part. One way you can actually keep remaining bearish on this market is as long as the monthly RSI on the Dow Transport Index remains below 3610. Currently the monthly RSI is at 35.27. This 36.10 is the lowest confirmed level on the Dow Transport RSI going back 28 years. So as long as we remain below these levels this month, I don't know where the month is gonna close, but as long as this keeps staying below 35.27, that's gonna be your cue to keep staying bearish in this market. Now if we recover and we find support here on the monthly RSI like we did beginning part of this decade, then we can change our sentiment. But for now, this to me remains like a bearish indication of where the market wants to go.